Hello, 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 everyone. Mike Arnold and soon to be on Bob Iacchino. CPI Wednesday. Rip your face off rally. There is no more inflation. It's all gone. The Fed has to cut. Good morning, Davey. Waka waka. What a poop show. Markets taking this crazy CPI is bullish. They don't know about the base effect and sticky inflation. Hey, they're going to cut. They're going to cut by the end of the year. They got to cut. Good morning, Josh. Guess inflation is going to be taken out to the lexicon. Uh, let's see. Good morning, Patrick. Hey, Sterling's back. If Sterling's got the right idea, back on vacation again. Good morning, Jacob. Good job, Sterling. I wish I could have vacation. By the way, if you aren't on vacation, please do consider subscribing, ringing that bell, and hitting the like button. Everybody else already knows what to do with that. Here is, let me just get rid of that. Then we hit the magic Bob button. Go juice mode, Sashi. Hey, Bob. So, inflation's gone.
It's completely gone.
Yay. Yay.
Yeah, this is so. I was on TV when this was released. Well, not TV, but I was on TD Ameritrade. I know a couple of you watched that, my regular Wednesday spot. And the first thing that Ben asked me was, so have we reached peak inflation? And again, like, I hate saying the same thing over and over again. And by the way, a ton of analysts were saying this on Bloomberg as well. The growth of price has moderated, okay, but it has not dropped. Headline inflation was zero, not negative. Core inflation was up 0.3, up 0.3, not down. And core year over year, same as last month, 5.9%, 5.9%. Headline inflation dropped to the wildly controlled 8.5%. So yeah, beautiful thing. This is definitely good news that inflation is not rising as fast as it was in the previous month, yet it is still rising and rising quickly. So yeah, the idea that inflation somehow has slowed down, this somehow has taken the Fed out of the picture, is absolute rookie baby nonsense. And it's people who haven't paid attention for markets longer than the pandemic. That's what it means.
Yeah, well, that 75 basis point hike sure dropped after that number.
Yeah, I said this on TD Ameritrade this morning. I said yesterday when we looked at it, 75 basis point probability was 67%. I suspect that has flipped. So what's the 50 now?
The 50 is 62 and a half.
All right, so almost a perfect flip. But when you look at it from that, 50 basis points. Prior to this particular rate hike cycle, I'd only seen one 50 basis point move in my career. So somehow this is the Fed being basically easy money again. Is a 50 basis point rate hike. Easy money.
It is,
Yeah.
it's again, the Fed's got to, I guess the 50% is the 50 basis point is the new pivot.
Yeah.
But you know what? I was looking at the components of the CPI and pretty much the whole drop or the whole reduction was due to just energy.
Yeah.
Everything else was up.
Yeah.
So
It was mostly energy. Yeah. Food was up. Used cars were down a little bit. Services were flat. But basically everything else was up. And we saw the wage component of the non-farm payrolls number up. And that's the biggest part of it at this point. Also, productivity way down. Lowest levels for productivity in the U.S. economy in over a decade. So productivity down and wages up. That's bad for prices.
that's an absurd. We won't pull back till SPY hits 450. That's actually an absurd comment. You're not.
All of Tom's comments are absurd. There's no point in putting them up or even responding to them.
Yeah, because that's
He
just.
doesn't come in on down days. He's not here on down days. That's the funny thing to me. We just had 3 down days in a row for equities on the future side of things. Cash side as well. 3 negative closes. We don't see hide nor hair of TomTom because TomTom's a friggin' idiot. So it's fine. I don't care.
By the way, we were just slightly negative. We're back to positive gamma, so we'll start getting that dampening effect also, and something to pay attention to going into next week because we have OpX next week. The two major strikes are 4150 and 4200, so we could get somewhat of a dampening effect, especially around 4200. Right now, we're trading 41.93. But again, will we see that magic 200? Uh, that's it. So, any other thoughts? Any other comments before? Did you see that little explosion before the CPI was actually released too? I mean,
Yeah.
the markets were like 30 seconds ahead of the CPI. Was
Yeah.
I'm like, oh, and they weren't subtly ahead of the CPI. It was like, all right, we know what the number is. Buy.
Right. That's hysterical. That doesn't look like insider trading at all. So
No,
the
I mean,
S&P is
this
still
was
down.
literally, I'm like, the CPI number hasn't
Yeah.
come out. The CPI is the number come out, and we were up. We were already up, like, oh boy, it was like 10 points in the S&P before the number came out. And you don't,
Yeah.
you're not front running a number like that unless you know.
Yeah.
So
Yeah,
it was
sure.
insane. So there's our big ramp up. Remember, tomorrow we saw PPI, and Friday we have preliminary consumer confidence. I think this was the knee jerk reaction, although I'm still midterm. I can be midterm bullish and long term bearish. I don't know why those are in conflict. I
They're
don't know why
not.
people can't wrap their head around that.
They're not. Look, TomTom just said he's been right since SPY 380, right? That's one of his just ridiculous comments on there because again, he only comes in here, he only comes into this room on up days. But we've been right, if you want to play it that way, we've been right basically since SPY 477. Okay. We've been right since then. So if you sold when we told you to at 477, because we say it 3 days later, no problem. If you sold at 477, the S&P is down still 12.5% based on the SPY and over 11% based on the ES this year. So stocks that never go down are still down 12.5%. So this is the idiocy of just listening to these things only go up comments. They're idiotic. They're inexperienced. I'm guessing Tom's about 19 years old, somewhere in that range. And I honestly don't want to give him much more time.
You,
So
you,
from that perspective, you can be short-term bullish and long-term bearish. I'm long Bitcoin still, okay? And that Bitcoin long is almost entirely based on the correlation to the NASDAQ because my S&P, I took profits on the S&P trade, and now I'm still long Bitcoin. Bitcoin is basically a long NASDAQ trade. The correlation's fallen apart a little bit, but not much. So long term, I don't think the low is in. Short term, I'm bullish. You can have different time frames. When you've actually traded for a living and have any experience at this, you know that time frames matter more than whether you're bullish or bearish. That's why I hate when somebody asks me, "Are you bullish or bearish?" I'm like, well, over what time frame? Today, I'm bullish stocks. Long term, I'm bearish stocks. Medium term, I'm bullish stocks.
hold on. Here's the comment. All right, Rams of Fall wins. In other words, go clean your room, pom pom.
Yeah, that's it.
Well, what's interesting is we got on a weekly basis the aggressive buy back at June. No, it was not 380. It was roughly 389. And then based off the 62 and a half close, on July 21st, we got another bullish sign to retest the highs.
Mm-hmm.
Or not the all-time highs, but the recent highs. So we've had bullish patterns. It's just and I'm
Sure.
still long-term bearish. There is no long-term buy signal, and this is what happens. You get the massive rallies, but that's what people don't seem to understand. So let me get through some other. Well, I don't even
Last
want.
thing I want to say, then I got to go. Look at what this moron just put. Look at the SPY, always up. Pull up a
Always
weekly
up,
SPY or
except
a
on the
month.
days it's
Look at it right
not.
in front of you. Look at it right in front of you. That shows always up. This is an idiot.
How does
Just
the
a
Fed?
moron.
I just want to go. How does the Fed rig it?
They don't. If they rigged it, they would never tighten. It's just it's a dumb comment.
Now,
So
I admit
anyway,
they've
I gotta
juiced the
go.
market through the last number of years with massive quantitative easing. They've juiced it, but there's not rigging.
Yeah. It's dumb. I don't think honestly it should even be responded to past this point.
Oh, I just find it amusing at this point.
It
So
is comical. It is comical. So
let
all right. Any questions for me on CPI or any of the fundamentals before Mike
I
goes into the
don't
chart?
see anything.
Yeah,
Again,
I
you'll
think the
be on
charts are
tomorrow.
important.
Tomorrow afternoon, we got PPI tomorrow morning, but you'll be on tomorrow afternoon.
Yeah, I'll be on tomorrow afternoon.
So, yep, there we go. Let me get through the rest of the markets to help people prep. And thank you for taking this time, Bob.
Yep. Cheers, guys.
All right.
Wait, Sterling. What's
Oh,
Sterling's?
yields.
Yeah, yields are falling dramatically. So prior to the number, yields were up 1 to 2 basis points across the board. And right now, we've even had the twos, tens inversion fall by about 6 points. It was 48 this morning. It's about 42 now. The 10-year is down 10 basis points already. The 5-year is down 15 or 13. And remember that the yields were actually up 1 to 2. So that drop of 13 basis points in the 5 years versus yesterday's settlement, it's more like 15 or 16 because it was actually up prior to the number. So this again is starting to price the Fed out, and that's going to end up being the mistake. Not saying that yields are going to climb back up again. You know that I think the S&P is probably going back up to the 200 over the short term, but yields are falling dramatically, and the inversion is actually coming out a little bit because they're falling across the curve. The interesting part about that is the 2-year has fallen 17 basis points, and the 10-year has only fallen 10. But the inversion is actually shrunk by 6 basis points because the 2-year is actually the 10-year was actually outperforming, or I'm sorry, the 2-year was outperforming the 10-year by a lot more than that. So
Yeah, and we've again the pretty monster move in the 10-year notes.
yeah,
I
so
this little reversal pattern here. And I'm like, that's not going all though this morning off the CPI print. Look at this.
and
Yeah,
it's
this
funny.
little
This is not even the lowest level for the 10-year in the month of August.
no.
The lowest close for the 10-year in the month of August was 260. I've got it at 270 now. We were 269 on the 4th. So
On
being at 270 now.
on the fifth we were at 119, but long term, I mean, this is fascinating because long term, I'm still bullish on notes because we've triggered an inverse head and shoulders.
Yeah.
So
So
this, just watching for some more up moves, but we got it. All right. Let me get back to helping other people navigate the markets. Thank you again for being here, Bob.
all right, cheers, guys. Talk to you soon.
Hey, everybody. How we doing? So, what's the on? It's slowed down going to the open. What's the continued areas today? My next target's the upside. Again, should we get above? It's sitting above right now. Should we resume? Let's take a look at the little shorter term charts. So, little pause here, but back above 4,200. Next level, 42.27, 42.72 to the upside. What is major support now? Major support is coming back. I'm using the daily support, about 41.56. Minor support into the open. I'm going to watch to see the 15-minute rotation zone if we do pull back. But beyond that, minor support would be at this point. By the way, we had this double, interesting enough. just to point something out for patterns, we had this double on the 1 hour, confirm in the European session, pull back, and then just goes blast through the targets with the CPI announcement, but the minor will be 41.83 and then more major. You can watch this other minor level should we get a little choppy on a pullback this morning. Again, I think this, once people digest the numbers, although we've had massive retail buying still, so not really surprised. I won't be surprised once we hit this 200. Still moving on up. But one thing very interesting is when things get pinned like this, it's generally be prepared for downside surprises at some point. So I would, from a personal trading perspective, when I see moves like this, you got to, again, medium term long, keep sane stops in the market. All right? Don't just go, oh, I can just ignore it and walk away. And by the way, you're not into a major clear path. You're now into a single candle clear path on there. NASDAQ, let's just get through to, we still do, just marking this off, we still do have a new potential double on the daily. A daily double. Next areas, if we break through the highs, remember we have not broken through the highs yet in NASDAQ from back on the 8th. But through that, my levels, the little reverse harmonics, 13,476, 13,533, 13,618 is the next major harmonic. The other ones would be minor. We had a little double in there too. The major breakdown, if we do reverse, and I'm talking majors back at this key low of 12,963, and that would be for my pullback move then. Other than that, we're still sitting here up against that key resistance. The levels, I'll watch for a pullback. I'll still use this 13,250 and then about 13,200 to 13,207. Where else we? Mike just trading. I'm long-term bearish but short-term calls. So Qs, we now hovering around the LT downtrend line strategy. Let it climb or wait to kiss the trend line. I mean, again, what I don't know the time frame on your calls at this point. That double is over. What I would do is be trailing, essentially, because we got option expiration next week. Here, I'd be watching for the next trend line. My next target I would utilize would be the more of 325, and I'd be trailing. If for the longer thing going into next week, I'd be trailing with a wider stop below about 317, 316.30 area. I'd be keeping it below the top of the daily rotation zone. Because again, we could get some overreaction here. We could still see some chop, but I'm expecting higher prices. So my next target would be this key, major key close from back on the 4th. You have that key close from the 4th, the key close from April 25th. You do have some significance here, especially with that gap through that level. And this key close back from 23rd of February. Would not be surprised to see this being a magnet price before hitting the 200. All right, so what's that? About 329.70 area. And the little, if you want levels before that, this is where you're going to want to use. Again, this is why I'm trying to teach this stuff. And look at that. Here's where we use the nice little reverse harmonics after the couple day pullback. And look where the reverse harmonics give me. So you can use 327.85 again for a stop raise on that break above 326.47 and 329 to 320, this key area. Now you have a key cluster. And I just did that real time. It's not like I sit and measure these things out ahead of time, just showing you how the tools work. So that's how I come up with something, and I give it a little wider stop, especially with still numbers coming in, but I'd still contain the upside bias. Can I check coin? Their earnings were horrible, but is trading in tandem with Bitcoin. If you were looking for a short, what price would I be invest? Let me just take a look again. Bitcoin with the market rally, we're gonna target this 25K. Just reminder on that. What level would I target? That's up minorly. What would I be watching for? Ugh. On a rally back up, I'd have to use this little. I'd have to really watch up between about 195 to 104.79 for another potential reversal up there. Otherwise, I would not be shorting until we got the breakdown below this key support ledge from the low, essentially on what day was that? The 4th of August. So real quick, we had the Elon selling. Tesla's now going to be up after hitting the first target there. Again, above that little double reversal. Next major resistance is going to be 908. And then remember, you have the gap fill up to 925. But we definitely got the go-go juice going. Let me just peek at crude real quick. That's, we're still first reaction to the daily rotation zone. Still going to see if this can get a move on with cycle still turning up. And my next key target area is about 93.50 to 94.80. Gold actually interesting. Gold's still holding up remarkably well, even with that CPI beat. It's going to be interesting to see what happens right now, but still keying off this. Looks like I'm going to have to get ready for the open, just checking on the short-term charts. We'll do a more thorough analysis afterwards, after the market closes. But based off this move, going to watch at least for the highs, and then with a momentum break of that, that's when get really bullish. But, I got to look at the market internals. Keep an eye on the tick and trend going into the market open. Where did we sit with the VIX? Can somebody type in the current VIX for me? So what's interesting, what's the current VIX? Because I know we broke a bit below that, but this low of 2076, if that can't hold, if we start moving back above that, I'll start watching for potentially choppier markets. All right. I don't think I missed anything else. Sorry I didn't get to everybody's comments, but we shall continue this afternoon. If something major happens, I will pop on at lunch. But other than that, well, glad VIX 2074. So pay close attention to this low back from the 5th. If you start edging back above there, and it can't be back below this 2076 level, the rally could be more choppy or possibly done. It could just be that reaction pre-market. And then so I need to see some really strong momentum to get still jumping on the severe bull train today. All right, with that, I will chat with everyone later. Bye for now.